Hello everyone, welcome back. Next week, a group of AI-related companies will report earnings in a concentrated schedule, with the focus mainly on AI's extended infrastructure layer. After the first-tier AI leaders have passed their test, the next question the market needs to verify is whether AI demand can continue to spread into the second layer of infrastructure. In other words, capital will not only watch Microsoft, Amazon, and Nvidia, it will also continue to observe semiconductor equipment, AI servers, AI cloud computing power, optical communications, data center connectivity, and non-Nvidia AI chips. At this stage, the stock market is fluctuating at elevated levels, sector rotation is very fast, and capital has become more pragmatic than before. To judge whether these companies are worth adding to a watch list or even worth waiting for a suitable entry point, we cannot look only at the AI concept. We need to look at 6 dimensions: whether revenue is growing, whether orders and backlog continue to increase, whether gross margin is improving, whether free cash flow and the quality of capital expenditure are healthy, whether the customer structure is reasonable, and whether the candlestick chart can confirm the move after earnings. Today, we will focus on this main theme and analyze 6 business directions and 6 stocks: AMAT, SMCI, CRWV, COHR, LITE, and CBRS. Let's start with the first stock, AMAT, Applied Materials. AMAT is a core company in the entire semiconductor equipment chain. If demand for AI chips remains strong, it will eventually pass through to wafer manufacturing, advanced packaging, DRAM, HBM, and equipment upgrades. If these areas remain strong, it means AI hardware demand is still spreading upstream into chip equipment. That is why AMAT matters. It shapes market sentiment toward the entire semiconductor equipment chain. If AMAT delivers strong earnings and guidance, SOXX, semiconductor equipment, advanced packaging, and HBM-related stocks all have a chance to continue attracting capital. If AMAT is weak, the ability of AI hardware to attract the next wave of capital will be pressured. The second stock is SMCI, Supermicro. SMCI is the most direct representative of the AI server theme. It represents the question of how real AI server orders are, whether profitability can improve, and whether delivery capacity can keep up. The biggest things to watch in SMCI's earnings are orders and gross margin. If orders are strong, it means AI server demand is still there. If gross margin improves, it means the company is not only selling more, but also making more money from what it sells. If revenue is near the low end, or if delivery progress falls short of expectations, the market will hesitate. So SMCI is a stress test for the authenticity of AI hardware orders. If the stock continues to rise on strong volume after earnings, it means the market believes AI server demand is still spreading. If orders are large but the stock does not rise or even falls on heavy volume, it means the market is starting to question order quality, delivery capability, and cash flow pressure. The third stock is CRWV, CoreWeave. CRWV has the strongest logic in this group of stocks, but it also carries the greatest risk. It represents the AI cloud computing power direction. In the past, the market was willing to give it a high valuation because demand for AI compute was enormous, customers were willing to sign long-term contracts, and data center and GPU resources were in short supply. If CRWV rises, it means the market continues to believe in the long-term logic of AI compute expansion. If CRWV falls, it means capital is starting to question whether a model of high capital expenditure, high financing costs, and high leverage can be sustained. This stock cannot be treated as a defensive asset. It is more like the most aggressive risk thermometer in the second layer of AI infrastructure. Next are COHR and LITE. These two stocks represent the optical communications and data center connectivity chain. AI data centers are not only about GPUs. The more GPUs there are, the greater the demand for data transmission between servers, between racks, and between data centers. At that point, optical modules, lasers, photonic devices, and high-speed connectivity become very important. Simply put, the bottleneck in the first stage of AI is computing power, while the bottleneck in the second stage may be connectivity. After the compute infrastructure is built, data needs to flow, models need to be trained, and inference needs to accelerate. Both inside data centers and between data centers, higher speed, lower latency, and higher bandwidth connectivity solutions are needed. COHR is more like a comprehensive photonics platform with broader coverage. LITE is more tilted toward high beta optical communications and lasers, so its volatility may be higher. If COHR and LITE deliver strong earnings, strong guidance, and their stocks rise on strong volume, it means AI capital expenditure is spreading from GPUs into the optical communications chain. This signal is very important because it means the AI infrastructure opportunity is not limited to first-tier leaders. Instead, the entire data center supply chain is beginning to take over. Finally, there is CBRS, Cerebras. CBRS represents the non-Nvidia AI chip direction. The market has been asking one question. Beyond Nvidia, will there be new AI chip winners? CBRS is the high beta representative in this direction, but high beta also means high risk. CBRS needs to prove that it can turn from a story into a sustainable business model. The market will focus on many tests, including whether revenue can continue to grow rapidly, whether gross margin is stable, and whether partnerships with major customers can continue to be delivered. If CBRS rises on strong volume after earnings, it means the market is willing to give non-Nvidia AI chips a higher valuation. If the stock does not rise after good news, it means the market may still only recognize Nvidia and a few AI chain names with stronger certainty. So which of these stocks is most likely to take over the capital that is rotating quickly? I would divide them into three groups. The first group has relatively higher certainty: AMAT, SMCI, and COHR. AMAT represents equipment capital expenditure, SMCI represents AI server orders, and COHR represents a comprehensive optical communications platform. Through these three stocks, we can observe whether AI demand is passing from first-tier leaders into the second layer of infrastructure. The second group is high beta but still needs confirmation: LITE and CBRS. They have greater upside imagination, but expectations are also higher. If their earnings cannot clearly beat expectations, it is easy to see the good news being priced in and then sold. The third group has the largest logic but also the greatest risk: CRWV. It represents the expansion of AI cloud computing power, but at the same time, it places the biggest test on financing capacity, return on capital expenditure, debt costs, and the quality of customer contracts. Before earnings, these three groups of stocks should at most be observed with small positions. What truly matters is confirmation after earnings. First, watch whether the stock rises on strong volume on the first day after earnings. Second, watch whether any pullback can hold the gap area or key moving averages. Third, watch whether peers move together. If only one stock rises, it may just be an individual stock move. If AMAT, SMCI, COHR, and LITE all strengthen together, that would show the second layer AI infrastructure theme is truly established. Remember one thing: a truly strong stock is one that can continue rising on strong volume after good news. If the stock does not rise after good news, or even falls on heavy volume, it means the market may have already priced it in, or may be starting to question its future growth. AI demand is still there, and AI investment is not entirely without return. For AMAT, watch equipment capital expenditure. For SMCI, watch server orders and gross margin. For CRWV, watch the financing logic behind high capital expenditure. For COHR and LITE, watch the optical communications bottleneck in data centers. For CBRS, watch whether non-Nvidia AI chips can be commercialized. The stocks that can truly become the next capital relay names are not the ones with the hottest stories, but the ones whose revenue, orders, gross margin, and trading volume are all validated after earnings. At this stage, reducing guess, building a watch list, and waiting for price and volume confirmation after earnings are more important than making a heavy bet in advance. The above content is for market analysis and risk warning only, and does not constitute investment advice. Before investing, please make independent judgments based on your own investment horizon, position structure, and risk tolerance.